Welcome to Supply Chain Revolution, how reshoring and friendshoring impact private investment. In this in-depth analysis, we'll explore the monumental shifts occurring in global supply chains, driven by geopolitical forces, and uncover the significant private market investment opportunities emerging as a result. This video is designed for learners, business leaders, and anyone keen to understand the evolving landscape of global trade and investment. The world is witnessing an unprecedented reshuffling of its supply chains. This isn't merely an economic adjustment, it's a fundamental transformation driven by escalating geopolitical tensions, national security concerns, and a new strategic imperative. We'll dive deep into these drivers and the lucrative private market investment opportunities they're creating. Our journey begins with the powerful geopolitical forces reshaping the global economic order. These drivers are not only influencing trade policies, but are fundamentally altering where and how goods are produced and moved around the world. First, let's look at escalating tariffs and trade wars. For instance, the ongoing tariff discussions between the US and India, or the broader US-China trade disputes, aren't just about taxes on goods. They're strategic moves designed to protect domestic industries, ensure fair competition, and sometimes exert political pressure. Beyond tariffs, the strategic rivalry between the US and China, particularly concerning technology and national security, is accelerating the shift. Countries are increasingly wary of relying on a single source for critical components, especially those with potential national security implications. As the supply chain landscape evolves, so too does our vocabulary for describing it. Concepts like reshoring and friendshoring are now central to discussions about manufacturing and logistics. Let's define these terms clearly. Reshoring means bringing manufacturing back to the home country. Nearshoring involves moving production to a nearby country, often to reduce transportation costs and lead times. And quote, friendshoring is perhaps the most strategic, where companies relocate production to countries considered geopolitical allies, emphasizing trust and stability over pure cost efficiency. This brings us to the quote, China plus 1 foot strategy. This isn't about abandoning China, but rather diversifying manufacturing operations to at least one additional country. For example, a company might maintain operations in China, while also establishing a new production facility in Vietnam or Mexico, mitigating risks associated with over-reliance on a single region. These geopolitical shifts are not just theoretical, they are creating massive, tangible private market investment opportunities. Private equity and venture capital firms are at the forefront, channeling significant capital into transforming global supply chains. A prime example is the surge in PE/VC capital flowing into manufacturing and logistics real estate. We're seeing unprecedented demand for industrial properties, warehouses, and factories in strategic locations. For instance, India experienced a 38% increase in logistics and industrial leasing in the first half of 2025 alone, indicating strong investor confidence in its role as an alternative manufacturing hub. Beyond real estate, private investment is targeting supply chain technology, from AI-powered logistics platforms to automation and robotics in factories. Specialty suppliers, those providing niche but critical components, are also attracting capital. And of course, the underlying infrastructure needed to support these new supply routes, like ports, roads, and digital networks, is seeing substantial investment. In any major global reshuffling, there are regions and sectors that gain, and others that face significant adaptation challenges. Understanding these dynamics is crucial for investors. Certain regions are clearly emerging as winners in the manufacturing migration. Mexico is benefiting from nearshoring for the North American market, while Morocco is becoming a key hub for European companies. In Asia, India and Vietnam are seeing massive inflows of manufacturing capacity, driven by their strategic locations, labor pools, and supportive policies. The underlying corporate strategy has fundamentally shifted from a singular focus on cost to prioritizing resilience and diversification. Companies are building redundancies and alternative supply paths to minimize future disruptions. Investors are increasingly allocating capital to firms that demonstrate robust, diversified supply chain strategies, recognizing that short-term cost savings can lead to long-term vulnerabilities. While the opportunities are immense, this transition is not without its challenges and risks. Investors must be aware of potential hurdles that could impact returns and operational efficiency. One significant challenge is higher operational and production costs. Moving manufacturing closer to home or to new, less established hubs often means higher labor costs, stricter environmental regulations, and less mature supplier ecosystems, which can translate to increased expenses for businesses. Furthermore, regulatory and political risks remain. Shifting trade policies, new compliance requirements, and potential political instability in emerging manufacturing hubs can create significant execution hurdles and uncertainty for companies and investors alike. Due diligence is paramount. India presents a particularly nuanced and compelling case study in this supply chain revolution, while private equity plays a critical, often unseen, role in driving these strategic shifts globally. India is uniquely positioned to benefit from, quote, friendshoring due to its democratic governance, growing economy, and large talent pool, making it an attractive alternative to China for Western companies. However, India also navigates its own set of tariff challenges with the U.S., highlighting the complex and multifaceted nature of global trade relationships even among allies. Investors are closely watching how these dynamics evolve. Crucially, private equity firms are not just passive investors, they are the engine driving this strategic supply chain shift. They provide the essential capital needed for new factory builds, technology adoption, and logistics infrastructure. Moreover, PE firms bring operational expertise, helping companies navigate the complexities of setting up new supply chains, optimizing processes, and managing risks in unfamiliar territories. Their long-term vision and hands-on approach are critical to the success of these transformative initiatives. The supply chain revolution is ushering in a more resilient, regionalized, and technologically advanced global economy. AI, robotics, and advanced analytics will continue to be key enablers, optimizing new supply routes and enhancing efficiency. This transformation offers significant opportunities for those who understand its drivers and adapt their strategies accordingly.